Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, July the 17th. I want to take just a brief minute to discuss what markets did last week, as it was a pretty tame and muted week in the markets, with the S&P 500 off 31 basis points, or down 0.31% on the week, so basically flat. The mid-cap index, as measured by the S&P 500, was off 0.59 or 59 basis points for the week. The small caps were the winner on the downside, as measured by the S&P 600, were only down 20 basis points, and it was understandably so that the market was going to be relatively tamed last week. We're entering now into the first week of earnings season. We're just now getting bank earnings, and those have come in phenomenally well. The banks are making good money. The encouraging sign that we're getting from the large banks, M&A activity is up. You're starting to see that pick up. You saw the most IPOs in the first half of 2025 that you've seen in the last 4 years, since 2021. So a nice pickup on the NASDAQ of a lot of new issues, which is a sign of a healthy market and a good, strong economy. So with that all being said, we were waiting this week on CPI and more corporate earnings, and so it's not a surprise, as we were saying, to see the market be pretty flat and tame last week. And so we move forward into this week, and we fast forward to Tuesday, and we get the CPI report for the month of June. Came in line with expectations at 2.7% headline year over year. While that was a slight uptick from May, it's still under that 3% number, but it is a little elevated. And what the Fed is waiting to do, and you can see in their minutes, is they're waiting to see the overall inflationary impact of tariffs on the economy. And if it's going to cause a bump up in inflation, they're not going to lower rates, so they want more time to digest. Well, we sit very clear right now of the inflation rate at 2.7%, at 4.25% to 4.5% on the Fed funds rate. So does the Fed have room to go down? Absolutely. Are they going to move down? More than likely not. And in July, we don't anticipate that happening. And what that would do if they did cut, you would start to see maybe a potential stimulation in the housing market that's really struggling right now with new issues on the housing market. Of new construction is down year over year, and that's because the buyers have said rates are too high and prices are too high. One of the two has to capitulate, and nothing has yet. One of the two eventually will, meaning sellers will lower prices or rates will come down. So if you'll remember back, we said that it was probably going to be very tough for the Fed to get inflation down to the 2% target for a myriad of reasons that we would give, and that's proven to be the case. And it's not necessarily a bad thing that it's a little elevated over 2%. It's a good thing for asset prices. It's a good thing for assets that aren't based on the equity markets. It allows for upward appreciation of assets to hopefully outpace the rate of the deterioration of the dollar. But anyway, we're moving into this season of earnings, and they've so far been good, but we're waiting to see the results of the Fed. The reason we want rates lower and would love to see rates lower is we're starting to see a high debt payout of our debt that we have to service. Lower rates, lower debt service ratio, more money to spend and stimulate the U.S. economy. So we see some choppiness moving through this earnings season until we get clarity from the Fed of what we do. The underlying economy remains very strong. The consumer remains strong. We got our second best reading of the year of retail sales this morning for the month of June, up 0.6%. It was a great reading. The top 20% of the United States is really keeping this economy moving forward. So if you have questions about how to navigate this volatility or what's going on, or until the Fed lowers rates, or what do you do, just feel free to reach out and give us a call. We'd love to speak to you. You can reach us at 904-346-3460. As always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.